Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me, which are of Sphere 3D, ticker symbol ANY, Applied Digital, ticker symbol APLD, as well as Rocket Lab, ticker symbol RKLB. And they are reporting earnings in the after hours today on February 27th. And I do want to note that I am recording this during pre-market on Tuesday, February 27th. And this is the third episode of Rough Cut Requests. All of these tickers were requested, and I actually forgot to go over Rocket Lab during Sunday night stream, which I do stream every week, Sundays at 9 p.m. Eastern. So tune into those if you do have any ticker requests. And so I'm just going to go through these unedited, so sorry about that, but just a quicker way for me to get the content out to you guys. And if you do enjoy this kind of content, make sure you like it. Always share your thoughts in the comments down below or in the live chat during live streams, and make sure you subscribe for more content like this. But now I'm just going to dive right into the charts. All of the lines here I've gone over either during live streams or previous videos, and I'm just going to adjust them here as I record this. And so here I'm going to start just going alphabetically by ticker symbol, going over Sphere 3D, ticker symbol ANY. And so here I think this was requested on Sunday night stream, and then I got a follow-up during Monday trading on Twitter. So thanks for the request. And so here, what you can see, I've drawn this retracement from the low just before this run up, and then also drawn this uptrending level of support. Excuse me, sorry, live, not live, but unedited. So you're gonna get that cough. Excuse me. Okay, and so, or throat clear. That wasn't a cough. Anyways, back to the chart here. This uptrending level of support. This makes me a little bit concerned, unfortunately, that we are testing this level. It's possible it could be bearish consolidation. But one thing that is encouraging about this, that I've drawn this uptrending channel. Price has resided in that, testing the bottom as well as the top of that. If I do extend this over to yesterday's trading, it would be the completed daily candle for Monday, February 26th. And I do note that in pre-market, price is up about 7.5%, up to $2.61, having closed yesterday, Monday, at a price of $2.43. $2.61, that is above this Fibonacci level, the 50% retracement, at a price of $2.57.8. And so the $2.61, let's see, it's just above that, barely above that. Unfortunately, that doesn't look like it has broken out of the channel, so it might be getting rejected. And also, pre-market can be a little misleading. Sometimes you see big move to the upside in pre-market, but then you create a gap, it gets filled during market hours. And so I do think that what we're seeing in the pre-market could be, kind of a fake out or rejection. If I do switch over to the hour time frame, it does look like we're testing that Fibonacci level, but being rejected by it, as we have been rejected by it before. Excuse me. We're not yet at the top of that channel. So I do think that the signs that we're seeing during the pre-market could be a little misleading, as we are testing this uptrending level of support multiple times. Got, at least 3 hits of that, but really repeated hits during this kind of consolidation along it. So, I do feel like this is, flagpole bear flag, and that it will likely break to the downside. And so a level that I could see acting as support, if it does break to the downside, would be this 786 retracement at a price of $1.70.5, or right around $1.70. So do look for that. We also do have, this resistance over here. So I do think that could act as support. If we look at the volume profile, it does appear that the 618 here at $2.22, it does appear that that is and has acted as support. really just with the launch off of that, having acted as a little bit of support here and here, but ultimately both of those times did break below. But we do have, the consolidation from that level. So it does look like it could be launching price higher, but if it does fall through, definitely the 786, we do see this volume shelf here corresponding to the consolidation here as well as over here. So that does seem, like a likely downside target. Upside, we really, basically, we need to be putting in a close higher than the highs here. Having these big wicks up over here, if I do zoom in, that does suggest that, there are no buyers up there. Once we get above this 50% level, people are selling. Nobody's buying up there. And so that's why we see these pullbacks. And so in order to see strength moving forward, we do need to be seeing closes above these levels. And so that would be getting 2 consecutive closes above $2.72.9, or really, $2.73. And so we want to see 2 closes above that level. And, if we get 1 close above, that's great, but that could be a fake out. And then we see a pullback, maybe back into this channel. So look for 2 closes above 273. And let's see. Then look for, a hold of this uptrend, ideally getting a close above another close, I should say, above $2.22. And if we can hold that, just look for, a little bit more movement to the upside, higher closes. But I do caution that this could be bearish consolidation, uptrending consolidation that would break to the downside. However, I do want to note, I don't see bearish divergence in the RSI. We are seeing lower highs in the RSI, just like we're seeing lower highs. And then as far as any bullish divergence, here we're seeing higher lows, and here, it's, potentially, let's see, we did see some bullish divergence here, that, we did see a lower low in the RSI where it was higher low in the stock price. That would actually be hidden bullish divergence. And so we did see that. We did see that play out with the run up here, but we don't see that anymore, as we do have, the RSI more or less at the same level here. So maybe there's some hidden bullish divergence. But yeah, the thing that stands out to me, and really what stands out, this kind of comparing with the Rivian chart, this was consolidating like this, or Rivian was consolidating like this for a little while, but then it ultimately broke down. So yeah, do be cautious of that, and keep an eye out for a possible return to $1.70 or $1.71. And so now moving on to Applied Digital, got a bunch of stuff on here. The last time I went over this, I believe, was during another Rough Cuts request. So my analysis might be even more rough here. Excuse me. And so what I see with this, we did have this low put in at $4.18.5. I believe the last rough cut request that I put out that covered this, that was the first episode, was following this day, February 12th. And I think I've actually recorded it during market hours on the 12th. I'm not exactly sure. But yeah, we did get this pullback, and I had suggested that price could be, going lower. We wanted to see, a close above, this level at $5.40, or ideally getting back to $5.58. But we did see a retracement here to the 786 at a price of $4.44.5, actually getting a low the following day on February 13th of $4.37.1. We did get a bounce from the 786 going up to what looks like the 382 at a price of $4.93.6. Got a couple, actually 3 wicks up to that level, hitting a high on the 20th of $4.94, so just piercing that level. But the reason why we could see that this was not going to continue higher, we did see a wick above that level on the 15th. And then on the 16th, we saw a wick even higher, but a close lower, putting in a close lower than the previous day's open. And so that did suggest there was a lot of weakness there. And the following day, the 20th, that was really the opportunity to exit at the 382 before continuation down, having broken below this previous low of $4.18.5. Doesn't look so good, having hit a low on Friday, February 23rd of $3.87.5. And yeah, kind of straddling that low with the open at a price of $4.30 and then closing at a price of $4.04.5. So really not looking too good there. And then let's see, I guess it is a little bit hopeful that on yesterday, February 26th, Monday, we did put in a higher close. However, if we look the open on last Friday, it was $4.30. The close on Monday was exactly at that price. The key is we need to get a close above, the high from Friday, which was $4.40. We are currently trading above that during the pre-market, being up about almost 5% in the pre-market following yesterday's move of up just over 6%, 6.3%. But that was following, this big red candle day, which came down about 6.5%. So really over the course of, these two trading days, kind of flat. And so let's see if I do flip over to the 1 hour time frame. It does look like, there's a potential run, maybe reclaiming, that low, or let's see, the 786 here at $4.44.5. So there's some potential there, but I just feel like, pre-market trading can always lead to fake out, stuff like that. So do be cautious of that. And yeah, so let's see. I can do from this, let's see if I have an extension that would go down to the 1618, see where that is at. That is, yeah, okay, so this gets pretty interesting to me. There's kind of this confluence of levels, a lot of levels down there, right around $3.50. So one is, let's see, there must be a, so I'm just going to auto adjust this so we can see all of it here. So following this, or I guess as a result of this big run up, I did this retracement here, coming back to the low that was hit on November 13th. That's at $3.52. And then also, the psychological level, I imagine that's why I have it there, $3.50 and marked in orange. Then it does look like there's a gap down there that needs to be filled at $3.43.5. I tend to color my gaps, in blue here. So yeah, that still needs to be filled. And then also this orange line, which I imagine if I switch over to the weekly time frame, that has acted as kind of like historical support over here and then resistance over here before this run up. So yeah, I mean, there are a number of levels over there. And then also, yeah, that Fibonacci extension that comes down to here. Let me do this. I want to do auto adjust. Okay. And then, yeah, that Fibonacci extension, the 1618 from this retracement here, that is at a price of $3.43.4. So, yeah, I mean, what we really need to see is we need to get another close above $4.20, basically. Ideally, getting a close above the high from Friday at $4.40. If we can reclaim $4.45, that would be good. That would also correspond to like the lows over here, kind of reclaiming that, the 786 as support. But, just because I see, all of these levels to the downside around $3.50, unfortunately, that's where I see price going. And I could very well be wrong. It's quite possible that, because price has reclaimed this low, potentially to reclaim the 786 here, perhaps I'm wrong. Perhaps this was a fake out, and perhaps this gap to the downside will never be filled, so it's quite possible. So do consider that, I have been wrong, in calling like, oh, this is going to continue down, but calling that actually at a bottom. So yeah, but for me, what I'm doing, I don't have a position in it. And, I would say I would wait for $3.50. And I do believe I had some alerts on here. I removed them for the video, for this recording. But yeah, let's see. I'm going to put those back on. And so I guess levels that stand out to me to pay attention to. One, breaking below $3.60. Really, I guess that just being above these levels so I could assess it down there. And then the other alert was like $7 something. So if yeah, that's up here. So that would be, if it breaks above these levels. But first, we need to reclaim $5.58, and then get to, back into this gap up here, get to the extension from this retracement at a price of $6.44 before filling this gap around, 750. So, potential upside, a lot of potential upside, but I just feel like the downside seems more likely at this point. But I guess you could make the argument that this is downtrending consolidation over these past couple months. Maybe this is a double bottom with a fake out breakdown. So yeah, I mean, it's tough to say. For me, I'm going to remain on the sidelines. If it does go down to 360, I'd consider it. But, actually taking a step back, I am a little bit compelled that this is a potential double bottom with a fake out breakdown, and that we could be moving higher to, above 558 in the next few weeks. But I, of course, could be wrong. So, but those are my thoughts on that one. And now I'm going to do Rocket Lab before earnings. Sorry about the big wait. Over 15 minutes. This is a long video, but rough cuts. Hopefully you enjoy the content, though. Hopefully it's useful. And do let me know, if you'd like to see more videos like this. And so, yeah, here with Rocket Lab, I had just gone over the potential, bear flag with ticker symbol ANY. I'm kind of wondering if that's what's going to happen with Rocket Lab, because we did get this drawdown and there's this potential, consolidation right before earnings. It is a little short, so there isn't much time for this to form that, bearish consolidation. It did return to the level that I suggested it might, right around $4.35, or this yellow line here at $4.34, actually hitting a low on Friday of $4.36, and then yesterday hitting a low of $4.35. And so for me personally, I have been intrigued by Rocket Lab. I've really enjoyed the engagement about the stock on the channel, so thank you for that. And, I've just been intrigued by the stock. So I did do a swing trade previously, and I sold at $5. But then on the way down, I did pick up a few shares, did pick up one at $4.35. But then because, I have, 3 shares, I can't be in, all of the stocks that I cover. I did trim yesterday, so now I do just have 1 share. I think the price, my average is right around $4.50. And so, if it does go up, if it does rocket up to, $5.10 and eclipse that, closing above that level, which would be key for it to start moving higher, getting confirmation that that is no longer the top. We've gone past this topping signal with these wicks, then I've got, 1 share to enjoy holding that. But, because of earnings are always risky. If it does break these levels, then, I can add easily, at lower prices, which could potentially be the 786 at a price of $4.15, right around there, or potentially returning to the psychological level of $4 a share, marked by this red line. But, considering that, I have all of these levels here, actually, I should adjust this retracement to be, let's see, I'm just going to do it kind of rough here, so it's not on the exact day. But since we did hit a low of 435, adjust that there. Those are some levels to the upside. But, like I said, since we did, what appears to be find support right around this yellow line, which I should note that is based on the low before this gap up. So, that was support back then. That was the launching pad before this gap up. Since we did return to that and actually haven't even hit that level, also I do have, the 618 from this retracement. We did return to that going, a fraction of a penny lower than it, but not closing below. And then also this, uptrending channel or parallel line that I have drawn, parallel line, or just this uptrending level that you can see here based on this prior support. It's been, prices resided in that, respecting that uptrending level for quite some time. We're at that level before earnings, not even at that level. We're above that level before earnings. So, I would lean more towards this going up, and potentially we see an open tomorrow, Wednesday, February 28th, above $5.10. And also, there has been some kind of comparison with this and Virgin Galactic, because I've covered them together. But I just feel like Rocket Lab fundamentally is a more compelling company because the U.S. government now has Space Force. We're invested in space and sending material supplies up into space, and so they could be getting contracts, with the U.S. government and other governments, and as well as private sector industry. So I think there's a lot of potential with this company. So even if it does break lower following earnings, I think that could be a good opportunity to pick up some shares. And yeah, I would just look for the 786, $4.14 to act as support. Maybe that's a dip buying opportunity. We see a wick down there and then a bounce back up to reclaim this uptrend, as we did see a fake out here. So do keep that in mind. I don't see any, bullish divergence. We see higher lows here, higher lows here. RSI is, right around the middle ground at 47.75. But yeah, just having returned to this level, having a green day yesterday, up more than 4%, being kind of flat during pre-market. I am, kind of regretting trimming my position, because I think this is going to go higher. But, like I said, I can't be involved in everything too heavy. And, I've got to, play it safe, at least for myself goes. If it does dip, I look forward to picking up shares at $4.14, 15 cents. But if it does go higher, I look forward to seeing where this could go. I do think it has the potential to get above and close above tomorrow. I think if it closes above $5.10 today, I think that could be a little risky with earnings coming up. Ideally, it stays flat down here, and then we can see a launch up in the after hours and an open above $5.10, potentially getting a close on Wednesday above $5.56, getting to the 1618 here. So, those are my thoughts on that one. Sorry for the excessively long video, more than 21 minutes, but hopefully the timestamps were helpful and you did enjoy this content. And if you did enjoy this content, make sure you like it, share your thoughts in the comments down below, and subscribe to the channel for more fun rough cuts requests like this and more coverage. And yeah, make sure you share this if you'd like to see more rough cuts, or if you'd like to see these tickers covered on a weekly basis. I will still do the normal follow-up on Rocket Lab on, I believe, Thursday. So stay tuned for that. And make sure you tune in to the live streams Sundays at 9 p.m. Eastern and kind of randomly during the week. Thanks a lot for watching.